Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 13th, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Our trading plan is our set of rules, our criteria for getting in and out of trades. It keeps us focused and disciplined, and it allows us to keep a track of our open trades and as we scan for new trades. More importantly, it cuts down on our research time so we have time to release and spend with our family. The week that was, well, we had the market up this past week, with the NASDAQ being the strongest of the three major indexes. We have ended our 3-week losing streak. We saw basically a less volatile trading week. 8 of our 10 sectors ended higher or unchanged, led by energy and basic materials and consumer staples. Again, overall, we had a less volatile trading week. And we saw some international factors, data, news impact the market more than our local news. Starting off by concerns about the Greece debt factor. And so we started off down on Monday, but then the EU stepped in and pledged support for Greece. But they didn't give it a lot of details, which did disappoint the market a little bit. But then the IMF came in on I believe Thursday or Friday and pledged support also with a little bit more details, and that found support for the market. We did continue to see our relationship with the dollar in the market. The dollar had some strength by Chairman Bernanke's testimony, basically implying that before long we will see a rise in the discount rate. So interest rates are going to be going up before long. Now, what does before long mean? Who knows? And we also saw China require their banks to increase their capital requirement, which also strengthened the dollar and saw the market go down on Friday. But once again, Friday we had a late day rally once again, and that saved the market. We rallied 100 points in the last half hour. We went from being down to basically break even on Friday. So certainly, although less volatile, certainly was an interesting half hour. Once again, fourth quarter earnings took a backseat. And as you guys know, it's President's Day on Monday, but it is also the start of the new year in the Asian markets. Carnival is starting, so we have up to about a dozen markets that will be closed on Monday. When we look at the economic data coming out next week, we do see the FOMC minutes will be released on Wednesday. Maybe they'll give some more clarity to Chairman Bernanke's testimony that he gave this week about the interest rates. But overall, not a lot of heavy hitters there. Again, the language that will come out on Wednesday could have an impact. So remember, the market is closed on Monday, so on Tuesday, not a lot going on. We do have Walmart coming up this week as far as earnings concerned. Maybe Dell will move the market a little bit, but overall, I think we'll continue to see the earnings take a backseat. Okay, so here we are looking at the Dow Jones, and there's a couple things I think we should look at. First off is this 10,200 level, right around here. This was the base of our October, November, December consolidation period, where we finally broke out of to the upside, and now we came right back and we're broken below it. So as we pull back up here, notice that we're coming to this 10,200 level. This 2,200 level here also matches up with the 20 moving average. So as we come into this what was once support during this consolidation can now be resistance. The other thing that a lot of people are talking about is this 10,060 range, and that as long as we're above that, that's where the buyers will defend it. But as you can see, we've already violated that. So I'm watching those two levels to see direction of trades. When we switch over to the monthly chart, we can see clearly that we came up to the 50 moving average, broke a little bit, and now we come back down below. You can see we found support at the 10 and the 20 moving average. We've got a downtrend from October 2007. But the other thing that's interesting as we come down to the volume is that look how strong the volume is so far in February. I mean, we're blowing right through January, December, and up to November. So this push down is certainly with volume, with momentum, so that's certainly something to watch. Now on the monthly chart, we have the long-term support here about 9,400, and then I think we've also talked about this level here again, where we are with the 10 and 20 moving average, which is around 98.60. Now let's switch to the NASDAQ. Here we can see the same thing of our support levels here of the consolidation period of November and December, and the NASDAQ did not really break it. It came down and found support in that level, and then now it's running back up, and it's already to the 20 moving average, which is kind of the top of that breakout level. And again, we'll see what happens as we approach the 50 moving average on a daily chart. So that is a 2200 level for the resistance, and down at the bottom we're at about 2100, 2125. Now switching to the monthly chart, we can see the NASDAQ was the strongest of them all. Where did it find support? It found support at the 50 moving average on the monthly chart, and now it's come back up. You can see we're matched up here. Where we are right now is these swing highs. So, and where do we stop? We stopped at the swing highs here. So that's our resistance. So 2350, 2300 is still our area of resistance above us, and the 50 moving average and 2100 is our support level. Finally, moving over to the S&P 500. And we see the same thing as a Dow. We broke the support level of November, December. That is now going to be our resistance as we come up to the 20 moving average. Again, the NASDAQ's a little bit further ahead of us. And this 1120 is the resistance of that consolidation area. But of course, we have the 50 moving average above that also. On the monthly chart, we can see the 50 moving average acting as our resistance and coming down to the 10 moving average. So still we have the resistance of the 50 moving average, and we have the support area of the moving averages. Let's look at the futures. Actually, before we go and look at the futures, we want to go ahead and take a look at the internals and see if there's anything given there. The internals are okay. We've had a good bullish day here, and we saw some negative. What's interesting, again, is going to be on Friday. You can see a conflicting bearish breath on the NYSE, bullish on the NASDAQ. So again, the NASDAQ really did lead us. The other thing that's interesting is that, and again, this has to do probably with the less volatile of this past week, is that is our VIX. And when you look at the VIX, one thing we see is that the VIX basically declined the whole week. And so remember, the VIX is a measurement of our fear. So even though we had some up and down, the VIX continued to go down, so that does equate to a little bit less fear. And our put-call ratio shows that also, that as the week went on, less puts were placed into the market. Okay, we're going to go to the education portion of our video. We're going to split this video up into two parts so that we can get to futures. But we haven't done our education part, so I want to get back to that. We're using the book Trading in Zone by Mark Douglas, Chapter 11, Thinking Like a Trader, the mechanical stage. And the mechanical stage is about the skills, but not just the trading skills to be a successful trader, but it's your confidence and belief in those skills. It's a psychological side about developing the right mindset for trading. That might sound a little touchy-feely for you, but it is as simple as believing you are a consistent, successful trader. Can you say that, and can you believe it? Because see, your mind goes into a self-fulfilling prophecy. We talk about that in education, that students become and act as you see them. And your mind interprets the data, the up and down ticks, based upon your emotional state. And if you have the right mindset of trading, your mind will be open to all of the edges, the opportunities, and more importantly, open to all of the chart patterns. But when you're emotionally driven, you close off to signals that say get out. You close off to signals that say to get in, because your emotions are controlling you instead of you controlling your emotions. Trading is about psychology. Trading is about being disciplined. And trading is about trust and belief that you can and will make money. As we said, we're going to talk about futures in the next video, but we do have a great futures partner, 10-day trial at $30. We'll talk more about that as we go along. And if you're going to trade futures, you might as well take advantage of our futures trading room. Trading broker, $300 margins for E-minis, 20 free contracts. That's up to $200 right there. Great charting platform for your scans, and we have a futures trading plan to help jumpstart you into trading. Of course, you might want to watch our video here about why you should trade futures. Follow us on Twitter and Facebook, especially those who are in stocks. You can follow us on Facebook to get our stock plays. Download our podcast. But remember, guys, you can lose all your money and trade at your own risk.